Okay, so today we are going to be talking about one of the most important trading processes, and that's journaling. Like, journaling is 100% one of the most important things you can do as a trader. And the reason for it is, think about it. Any professional player, they don't only train, which means they don't only backtest, they also review the games that they've played. Right? You can't, like, the best thing for you to learn with is actually from your previous experience. It's the same thing as when your parents say, hey, don't touch the stove, it's hot, you're gonna burn yourself. You're still gonna touch the stove. You're gonna find out for yourself. And people do say that people that are very, very smart, they learn from other people's mistakes. And that is true. But everyone needs to learn from their own mistakes. And it is guaranteed that you are going to make mistakes in trading. It's guaranteed. That's why journaling comes in, because journaling will allow you to, okay, I've learned from other people's experiences, like you're learning from this course. I'm now going to backtest it. I'm now going to apply it live. Okay, Kimmel is profitable with it. I'm still making mistakes. How can I learn? It's by reviewing the trades that you're taking and comparing to the trades that I am personally taking, for example. Right? So when I say that journaling is important, is not because, oh yeah, you're only going to learn from your mistakes. No, you're going to learn from your mistakes. You're going to learn from my mistakes, because I'm going to keep posting trade recaps here on YouTube. So there's many, many things for you to learn from when it comes to trading, and especially from your experience. So no, the way that we are going to learn on how I journal is by actually journaling myself. I'm going to journal this trade. This to me was a very, very good trade, and I'm going to talk to you about why I'm also going to be journaling the negative confluences. Because a lot of people, they're like, by the way, this is the journal. So basically, you can either have automated, which is Tradezilla, which the link is going to be in the description. You can also have Notion, which the link of this template is going to be also in the description. I think it's going to be the first link. You'll have access to where you have access to all of the resources. And now, obviously, you have to pay for the automated, obviously, but if you want something that is free, then you have the Notion, which, again, you'll just have to input everything yourself, but it's fine, right? Because everything can be simple, right? You just add a new win, and then this is what appears, right? This is what you're gonna have when you add the new win. You just let the Notion know when you open the trade what grade you think the trade was, the R, and then that's it. Now, onto the screenshots. Very, very simple. Take the screenshots where you can see everything clearly. Copy image. Go. Boom. 4 hour. I'll also do the 12 hour. I'll also actually add the 12 hour. I think it's important. I love the 12 hour. I really love the 12 hour. And it was so random where I learned about the 12 hour. Basically, someone told me that this guy was really, really good. And he, instead of using the daily, he uses the 12 hour. And I was like, oh, okay, let me talk with him. Had a one-on-one session with him. And there you go. Learned about the 12 hour. Now I use it all the time. So let's go right there. Take a screenshot of the 1 hour, take a screenshot of the 15-minute right here, and then take a screenshot of the lower time frame, which means the 5 minute, sorry. Or if you trade even lower than the 5 minute, then you take also a screenshot of the even lower time frame. And then the entry was taken on the 15 minutes. So I just come here, copy and paste. So now you need to think about the positives and the negatives, because this is what a lot of traders don't understand. Every single trade, it doesn't matter how good the trade is, there's still the possibility that the trade is a losing trade, right? Does not matter if I give you a 90% chance of playing out trade, there are still reasons as to why the trade could be a loss. And one of the things that you will learn about in the future about trading psychology, which is right after this, you will learn that the best way for you to overcome your trading emotions is by understanding that your emotions come from bad expectations. When I mean bad expectations, it means if you expect a win and you take a loss, that is going to be emotional, right? But if you already expect a loss because you already understand all of the reasons why the trade could be a loss, then you're onto a good path where you're not going to feel as much emotion. Because everyone that is just focused, this trade is going to be a win, this trade is going to be a win, this trade is going to be a win, And you might know that there's probabilities involved, but if you don't know all of the reasons why the trade is going to be a loss, then you have no idea why this trade could be a loss. So if the trade does play out to be a loss, you're like, what? Why? Everything was pointing in my favor. That's why you need to also journal the negative confluences. 100%. And you'll see, I will list out a lot of positive confluences and some negative confluences. In a trade, technically, it should be the positive confluences get outweighed by the negative confluences, right? That's normal. That's trading 101. Like if you want a profitable trade, at least have more positive confluence than you have negative confluence. And they don't even have to be more in terms of number. You can have a lot of negative confluence as long as the positives outweigh the negatives. Then you take it, right? So let's start off with the positives. First, it was that there were very clear targets on the daily, right? So I come here and I write very clean targets on the daily, gave me a clear bullish daily bias, right? So that is number one. Then 12 freshly formed. No, I'm even going to mention that daily is short-term bullish, 12-hour bullish, 4-hour bullish, 1-hour bullish, 15-minute bullish, right? So all time frames are aligned bullish. Daily, 12-hour, 4-hour, 1-hour, 15-minute, right? All of these are aligned bullish. Freshly formed 12-hour order block. We can see it here. Freshly formed 12-hour order block. Power of 3 formed and completed towards the 12-hour order block. Tap of 4-hour fair value gap and order block. So let's go onto the lower time frame and we will see that happening. So notice 4-hour fair value gap right here. Let's put it in green. Ugh, this is not green. 4-hour fair value gap, 4-hour order block, right? So we have two things aligned, just screaming, I am going to move to the upside, right? So 1 hour, we have the 1-hour fair value gap, sure, but I just want to kind of mention this 1-hour fair value gap. Don't overthink that fair value gap. It's just hindsight, really. You have fair value gap, overlapping fair value gap, which is supposed to be a BPR that then gets inverted again, and that's what is being respected. So I will mention in tiny 1-hour inverted fair value gaps, right? Then we have daily manipulation done. London manipulation to 15-minute fair value gap. We have SMT with GBP USD, which is also giving us strong bullish bias. So what I mean, if you check this low and this low on euro dollar, they are the same as this low and this low on pound dollar. So I'm actually entering in the best pair, right? That's why euro dollar was such a high probability trade, because pound dollar was also showing bullishness, but euro dollar was showing even more bullishness. But you use the fact that both of them are showing bullishness as a positive confluence, right? So continuation trade, which confirms the bullishness on the day and on the session. And what I mean by that is that London session opens right here, right? London session opens right here. As soon as London session opens, we have a little bit of a manipulation towards the 15-minute fair value gap. So a lot of people, they would enter here, but that's basically you calling the low that this 15-minute fair value gap is the low of this London session. I didn't do that. I waited for the market to manipulate lower and then move higher, creating a new 15-minute order block that turned out to be the continuation trade. So the trade was taken on the 15-minute order block, right? And that confirms the bullishness on the day and on the session. So notice how many positive confluences there are. But still, there are negative confluence. There are negative confluence that would turn this trade into a losing trade. For example, the manipulation, it wasn't that great. So, session manipulation wasn't great. Asia low was not swept. It was on GBP USD. Then we have the fact the weekly is still bearish and we are at a weekly order block, which means, and by the way, we were basically hanging around here. So we were at this weekly order block right here. So weekly is still bearish, which can take, and the weekly can take control at any time, right? Because at the end of the day, the market is fractal. And so if the weekly starts to be bearish, you can bet that all of your bullish biases are going to be out of the way. And so the weekly is bearish. And I would also mention that the external structure on euro dollar is still bearish, even though internal structure on euro US dollar is bullish. External is still bearish / neutral, which can create messy price action. So notice, I just mentioned a lot of reasons as to why this trade is going to be a loss, but I'm also aware that at any point, this can turn into a loss because there are reasons as to why this trade can turn into a loss. And that is going to greatly reduce the amount of losses that I'm taking. And let's say the other thing as to why the negative confluences are extremely important. A lot of people, they just want to believe that all the trades are great. And all the trades are not great. That's first of all. Second of all is if you don't point out the negative confluences, you do not know, and you are unbiased about it, you do not know all of the reasons that you are consistently taking losses from. Because let's say that you're constantly taking losses because you're trading against the trend, because the daily is bearish, yet you are seeing a market shift on the lower time frame, so you want to enter, right? So let's say that you are only taking longs, all of them were losses, and then in your journal you see, okay, trade, negative confluence against the daily bias, negative confluence against daily bias, negative confluence against daily bias. Oh, wait. What the fuck? Maybe I'm doing a mistake over and over again, a stupid mistake over and over again. But if you don't journal, then you will never know. You will never know the pattern between your negative confluence. You'll never know the pattern between your positive confluence. You're just thinking, oh yeah, like that trade. Yeah, I remember it. It was the, that trade was good. Why? I don't know. I would have to check it. Okay, this loss, why was it bad? I don't know. Let me go back and check all of the time frames, right? You need to be able to pinpoint exactly and have stats behind everything that you're measuring, right? You need to measure these things. How many times are you entering in with multiple time frames in your control, in your order flow, with order flow in your control? Like, how many times are you entering with 5 time frames in your control? Like, listen, here, daily, 12 hour, 4 hour, 1 hour, 15 minute, 5 time frames aligned. 5. That's why it was a great trade. It was a clear target. 6. There's so many this trade was so good in my mind because everything was like, I forecasted this in the morning. Again, we'll talk about forecasting if we haven't yet. Yeah, no, that's forecast is going to be before. So we talked about forecasting. So now it's about putting it into practice and actually executing on the trades and then journaling the trades. Because if you don't forecast and you take a trade and that is a loss, you're going to be like, fuck, I knew I should not have taken this trade. But if you forecast, you take the trade and it is a loss, then you just stuck to your plan. And that's the number one thing you should do as a trader. But if you don't journal or you don't forecast, then you're just shooting yourself on the foot because you don't know what you should be executing on, and you don't know what your mistakes are, and you don't know what the good things that you are doing are, right? So there you go. You're just shooting yourself on the foot. Is that really what you want to do? No, it is not. So with that being said, that is the journaling part. Like, do not make journaling complicated, because if you make journaling complicated, and by the way, here I just change it into euro dollar. If you make journaling complicated, you are not going to do it. I'm telling you right now, if you are making journaling complicated, you are not going to do it. Then you are not going to have then you are not going to have stats, and then you are going to lose. And then you are not going to understand why you lose. And then in 2 years' time, you'll ask yourself, why am I still an unprofitable trader? If you are now 2 years unprofitable, and I ask you for your journal from 1 year ago, and you don't provide that to me, I'll be like, okay, that's exactly why you are unprofitable. That's it. If you are unprofitable and you don't have a journal, you are going to stay unprofitable. I'm telling you right now. This template, again, Notion, I believe Notion is free. I have the education thing with my university that I used to have before. I have it for free for like a long ass time. So Notion I think is free. If you guys want to pay for TradeZella, then do the exact same things. The templates are always going to be good. So with that being said, that is really it. Okay, so I hope you enjoyed. I hope you took some value from it. Check this template in the first link in the description, and TradeZella in the second link in the description. I don't know. It's going to be somewhere in the description. So with that being said, I hope you enjoyed, and I'll see you in the next video tomorrow. Peace. Hope you enjoyed this lesson. Click right here to watch the next one. And if you are struggling with overtrading, then click right here to check out TradeBlocker. Peace.